Hey, this is John Matthews. I am the president and CEO of Gray Cat Enterprises. And let's talk about trying to find some dollars in your own P&L, your profit and loss statement, and how to drill down into that on a regular basis. So basically, how do we uncover the opportunities? How do we go and make sure we have a disciplined approach to finding opportunities within the P&L? So there are certain things that we would want to look at, certain drivers. Obviously, sales, we want to make sure that we're tracking in the right direction on sales. Are we up over last year? If not, what adjustments do we have to make to our expense line? Cost of goods sold, have our vendors increased their pricing, and have we made changes to our pricing structure to accommodate that? And that reflects in both margin dollars and margin percent. And then a line by line approach going through your operational expenses. There's really no other way around it, but if you go through it, and you will uncover opportunities by going through each and every line. And you do this on a normal routine basis. So you got a pretty disciplined approach. Generally, you're going to start with an annualized budget summary. This is going to be probably based over 13 periods or 12 months, depending on how you're set up. As you go through the year, you're going to get 3 months in and you're going to say, I've got 3 months of actuals and I've got 9 months of forecast. So that's called a 3+9. And as you progress through, you get a better picture of exactly how the year is going to end up because you get more months that are actual than forecast, but allows you to kind of break it down and take a look at it month by month or period by period. And you can actually delineate it even further through store or departmental segmentation. So you want to compare trends. You want to know what your actuals are versus the budget. You want to know what your actuals are versus last year's actual. You're looking for run rate opportunities. Maybe your telephone expense has gone through the roof this year and you want to ask your questions why. You may see other expenses going down and you just want to have a good understanding of where opportunities lie. So your revenue drivers in the convenience store world are fuel volume and gross product sales and gross margin. And then again, that line by line operating expenses. I know one of my favorites is looking at the trash dumpster in the back and behind the store. And are you training your employees to crush boxes and crush cans to go with a smaller dumpster, which will cost you less and perhaps doesn't have to be picked up as often? So that's one way of saying, hey, I'm going to try to save 10 bucks a month, 20 bucks a month, $100 a month. It all adds up. So being proactive and taking ownership on a line by line basis is a great way to take a look at your P&L. Do it monthly, do it quarterly, do it every 6 months, whatever your cadence is. Make sure you have a consistent approach to maintaining your integrity of your P&L budget versus actual. If you want me to help you out, I can do a virtual P&L analysis for you. So you can reach out to me, the number below at 847-502-6554. And once again, my name is John Matthews. I'm the president and CEO of Gray Cat Enterprises.